The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right, let's check the numbers again. Let's take a look at Bitcoin, see how it's doing. Pretty flat, 47,840 according to the CoinDesk Bitcoin price XPX index. Let's take a look at Ether. Ether, how you doing? 3,426, definitely up a bit sharply in overnight trading. And we'll take a peek at the DeFi index, DFX, sitting now at 689.47, now 691.40. And that should be moving throughout the day. Shifting to the world of DeFi, we are going to discuss crypto markets and other news with John Wu. He's the president of Ava Labs. Welcome to First Mover, John. How are you today?
I'm well. Zach, Lawrence, how are you?
We're doing good. We're hanging in there. So I wanted to talk about NFTs. NFTs remain very exciting. They're kind of becoming table stakes for any base layer, including Avalanche, of which Ava Labs is intimately involved. What's your view of why NFTs remain really exciting to people in the crypto market now?
Sure. So there's been a lot of news about NFTs. In fact, Ava Labs, the software and licensing firm behind Avalanche, today there was news out that we're working with Topps and Major League Baseball to create NFTs for them. You just had a great segment on Asia and how some young kid was able to create a business out of her art. All of these things are an indication, and you started the segment off talking about DeFi. So what is important about all this is basically utility on the blockchain, utility on Ethereum, utility on all the alternatives such as Avax or Avalanche. And I think we started out the broadcast, I heard Lawrence say that it's kind of like alt season. And the reason that is all happening, in my opinion, is because of DeFi, because of NFT, people sense and see finally real use cases. 150 billion in TVL in the DeFi world. You've got a couple of unicorn companies in the NFT market. We're talking about social tokens. All of these are actual use cases and people are excited about it. And that's why there's a run in the alts.
Hey, I wanted to focus in on this MLB news that you just shared with us. I hadn't even seen that one, so that's pretty cool. I know that MLB launched their first NFT platform on the Wax blockchain, and I think they had some hiccups at launch. So I'm curious as to how that ended up migrating over to Avalanche, and if you could share a bit more detail about how that choice contract was snagged.
Sure. So the partnership is with Topps, who has a license agreement with MLB to create these digital collectibles. I think they did start on Wax, but going back to the core principles of why anyone, whether it's in DeFi, whether it's a user or a dApp, comes and basically develops and uses the Avalanche platform, it's because the protocol has achieved certain things that hopefully ETH 2.0 will achieve for Ethereum. It is fast, it's scalable, the finality is less than 2 seconds and less than 1 second most of the time. So when you have something like that, ultimately you have lower costs to mint things and you have a more stable platform. So that's the reason why anyone, whether it's DeFi or whether it's NFT, wants to come over and use the Avalanche platform.
John, I wanted to ask you what was causing DeFi's recent run-up, at least. But before we do, getting back to Zach's point, what exactly is this Topps deal going to look like? What are you providing? What are people going to be able to buy? Are they going to buy, virtual baseball cards with their favorite players, old baseball cards from previous years? What is this going to look like?
So there's two questions there. The first one, from a user perspective, what they can buy, it is going to be incredible. What you've seen in other platforms, I can't go into specifics because I am not Topps, so we'll let them do that. But what you see in other platforms and what you can create with the rights to individuals who are baseball players or moments in baseball games or events, you'll see the same type of NFT capability on the Topps platform. What Avalanche has done for the NFT marketplace is Avalanche has created a unique platform where you can actually, it's almost like a hybrid. In certain NFT platforms, you've abstracted away the entire blockchain experience, and others are very blockchain native. So on one hand, you have to fiat on board, and you don't even actually know where on the blockchain to look to see your NFT. On the other hand, it's all crypto to crypto, and you hold it in a wallet. It's self-custody. The platform of the infrastructure for NFT that Avalanche has and that Ava Labs created is something that gives everyone their choice. If you want self-custody, you can have that. If you want to purchase with crypto in a box, you can do that. If you want to do it through dollars and a dollar on-ramp and dollar off-ramp, you can do that. That value proposition really doesn't exist right now.
So
I think the TOPS contract, that's a good episode in the battle for the base layer. So I wanted to change gears a little bit. I could talk baseball all day, but I did want to go to the world of DeFi because I think there's a lot of interesting stuff going on in DeFi for sure. You guys rolled out the Avalanche Rush program, $180 million in incentives. And we've seen other base layers follow suit in the last week with Cello, Phantom rolling out similar incentive programs to attract DeFi users and builders to these networks. I guess I wanted to just zoom out just in really basic terms. When you're explaining to your, let's say your mom or your aunt or your friend or your coworker who may not be crypto native or crypto savvy, if you were to explain what this concept of liquidity mining is and why it's very powerful for moving people around the DeFi ecosystem, what's your best way to describe that in simple terms?
Sure. So if I were to explain it to the whole system, the Avalanche Rush is what you're talking about in terms of the 180 million. It's actually, in plain English, it is basically a user and application acquisition program. It is no different from when Uber used to give out $30 for people to go and take rides. The only difference here is in Uber's case, they created their own technology all by themselves, and they're just incentivizing the user to use it. In these programs, such as liquidity mining programs and so forth, what you're doing is actually you're incentivizing two parties, the user and the dApp developer, to both come into the ecosystem. And then you have these compounding loops of success, and you have tremendous growth, as we've actually seen in the TVL of Avalanche just in the last 10 days to well over 2 billion now.
John, do you think these kind of incentives maybe will raise red flags with regulators? People who might worry that it gets too close to even becoming a type of security almost. Is there any concern on your part that this might get a little too close to what for comfort for regulators?
Well, one of the reasons why, Avalanche, the foundation, did not launch this sooner was because we vetted it with, all the best lawyers. Our in-house counsel is one of the best as well. It depends on how you do it. And, if you do it in a way that's no different from my example of Uber giving $30 out for people to use a real use case and having utility, then any problems you run into, Uber in theory should have the same problems. There are other ways to do it, not the way we did it, that could be construed as it's more of a security, and then that would run into issues.